Hello and good morning. I'm Swaroop Gupta and I head the Financial Briefing Service and the ESG Rating Service at Economist Intelligence, or EIU, which is the research and analysis wing of the Economist Group. I have great pleasure in welcoming all of you today to this interview with Shahrukh Moinian, head of Europe, Middle East and Africa for JP Morgan Payments. Please come on stage, Shahrukh.
Thank you, Swaroop.
So today's session is breaking down barriers, building supply chain resiliency by bridging the lending gap. So how can emerging technology and embedded financing play a role in improving global supply chains? How can banks extend financing to smaller companies? And how down the supply chain, down right through deep tier supply chain finance, and how does that improve supply chain resilience? How does this feed into ESG targets? So to kick off quickly, Shahrukh, what do you think are the biggest obstacles to the digitalization and digital transformation of global trade, and could payments or the digitalization of payments help ease some of these friction and iron out some of these pain points?
Oh, yeah. Thanks, Swaroop, and good morning, everyone. It's great to be here in this great discussion here. I'll start off by taking what you call global trade in a very focused fashion. So let's talk about documentary trade, which has been synonymous with risk management, risk transfer from a local corporate to a bank and then confirmed by another bank. And also synonymous with financing, because some of the elements and documents in trade, like the bills of exchange, are used for discounting and for advancing cash. But this has also been synonymous with a couple of other things. One is paper. Every year, there are 28 billion pieces of paper wet signed around the world associated with what we call documentary trade, 28 billion. It's also associated with a manual type of work. And it's very specialized manual intervention. So the joke is, you have two people from trade finance in a room, you have 500 years of experience, because that's the kind of experience you sort of need. And that experience soon will probably also retire, and it's not being replaced as such. And it's very, time consuming as well. So that's why, and trade finance and documentary trade is called sort of the beginnings of banking. Started in this very region, Mesopotamia, trades of spices and things like that. Some of the trades are still there in today's economy, unfortunately, many centuries later. So on the one hand, you have that. On the other hand, what you refer to as payments is the massive revolution that has taken place in real-time payments, consumer-type payments, open banking, wallet-type payments, etc., which have been driven by a couple of things. One, by consumer expectations and consumer experience. So the power of the handheld that we've all been given, which has more power than an IBM mainframe from 1996, which was the size of a tennis court, has gotten us used to a frictionless payment experience. Meaning, you want to do everything on an app, you want to order a taxi, you order Uber, and then it's all done. It's ordered, it's paid, you could see it on the map. And no consumer, I can tell you, wants to do these things separately. Order a taxi, go on a separate app, make the payment, and then maybe go on one of these maps and see where it is, potentially, if that was possible. So that is one of the drivers. The other driver is obviously technology. So the power of computing these days, the cloud, allows us to do multiple things in a given second. So the throughput per transaction per second used to be 1 or 2 in the past. Now it's 5,000, 7,000, including some of the controls that we have to do on transactions, anti-money laundering, sanctions, etc., in milliseconds. The other part of technology is obviously APIs that has allowed interoperability between systems of different languages. There's obviously AI, machine learning that we use in payments to direct the funds in the most efficient flow to get to the destination. And then blockchain, distributed ledger. So all of these things have actually increased the gap between what we call modern payments and documentary credit. Now, the good news is that we're making headway on the trade finance as well. Things are moving. On the one hand, the value of risk mitigation, risk transfer of the current documents that we use in trade finance is recognized, and for now it's considered not to be replaceable with anything else. However, nothing is holding us up in digitizing those documents, and this is what we at JP Morgan have done internally. But also, one of the foundations required to digitize documents is a legal framework to recognize those documents. And we've seen this with the UN model law for electronic transferable records. It's a big word, so MLETR, which has, coming back to this region, already been adopted in Bahrain, for example, in the Abu Dhabi Global Market, so ADGM offshore unit that the UAE is building, that has been adopted there. In Singapore, in the UK is also getting there, so the ability to transfer and negotiate these documents electronically. At the same time, and His Excellency the Minister of State for Foreign Trade said, there's a lot of work being done on the blockchain, especially in the UAE, to advance the cause and potentially even replace the actual documents that are being digitized, because as you know, the blockchain and distributed ledger has the ability to provide smart contracts and their legal basis for doing it, provided that there's recognition of that. So that is on the risk mitigation side. On the financing side, we probably made headway even before that by replacing or adding structures such as supply chain finance platforms that allows very large corporations to advance funds to their suppliers all around the world in a more automated fashion. We have spent a lot of money and time and investment on that, in automating that, in making sure that the onboarding of the sellers is as seamless as possible. So those two areas, I think, have evolved, and the good news is that the gap is now getting closer between what we call documentary trade and digital.
And those are really interesting points. So I'd like to club the next two questions in the interest of time so that we can take some questions from the audience. So where does e-commerce fit into this? How does this help to digitalize trade faster? And tied to that, the role of embedded finance. Can fintech play a massive role in terms of the digital transformation of trade, which, as you correctly describe, is still stuck in a world essentially populated with lots of paper?
Exactly. So lots to discuss there, but on e-commerce, obviously it is playing already a role in digitizing trade. So e-commerce, the ability to buy and sell online on a global platform and also pay for it electronically, started as a B2C experience. But now, interestingly enough, there's more B2B platforms than B2C. Whether it's raw material, whether it's logistics, space on ships and shipping last minute, etc. And the good news with all this is that by putting all these markets and marketplaces together in ecosystems, you by definition automate the payments, you speed up the whole process. And whether we like it or not, there are a few dominant players who play a role, at least in B2C e-commerce. Some of the the US companies, the Chinese companies who are also going to B2B. That has created a certain trust in the system, confidence in the system that you sell, you get paid, and some of the risk mitigations I think have been dealt with there. Taking it further, and this was a discussion I think in the previous panel around embedded finance. So embedded finance is basically taking some of these ecosystems and allowing some of the players that we as banks provide solutions to provide financing and banking solutions to their end customers. So wallets, buy now, pay later models, financing, powered by us, for example. And this is generally extending the reachability and the number of players on such systems. You asked a question about fintechs. Now, this is very interesting because, as we said, a couple of the obstacles on documentary trade have been just the general manual and paper-based nature of that business. Now, technology companies, fintechs, in various niches have played a key role in potentially transferring and changing these things. So we could take a couple of examples, just one example. Today, when we do payments, cross-border, domestic, etc., there are various controls that we have to take into place to make sure there's no money laundering going on, there's no terrorist financing, sanctions are being abided by. And when you look at electronic payments, so open account trade, those things could be done within seconds or milliseconds, as we discussed, because it's digitized information. Today, however, when you look at documentary credit, these things have to be gone through paper.
Checked, cross-checked,
Cross-check, etc. You have to also check other things like price checks to make sure that the letter of credit is actually a real letter of credit, and the prices of goods being sold are real prices and are not being bloated to move money around.
But the entire AML/CT process gets
exactly.
sped up.
Vessel checking, the vessel stop here, etc., is a sanction, etc. However, in today's world, we don't have time for those things anymore. For certain industries, the oil industry, the gas industry, commodity traders, you need to turn around these documents within a few hours, in the same day. So what we have done is that we have invested and taken strategic alliances and investments in a couple of companies. One is ClearEye, as an example, which is specialized in AML and sanctions and basically the controls in an automated way, looking at AI, looking at machine learning, using all those technology to drive us to the next level. Other examples are in supply chain finance, companies that we have invested in.
Just to sort of butt in,
well.
what kind of turnaround time, sort of reductions are you looking at? By 20%, 50%?
We're looking at massive. Let's take what could be done normally in 24, 36 hours in 3 hours. And this is the power of the machines that we have out there, and machine learning and technology that we can put to good use. So I think to sort of leave some time for a question or two, I want to leave this audience with a positive note that we're going the right direction. Technology is getting its way into old trade finance as well, and this will definitely help trade and movement of goods and goods sold around the world.
Right. So if we could have some questions from the audience for Shahrukh.
There's a question up
there.
I
can see a hand up there. Just one. Okay.
Thank you. My name is Matthew Salver. I am an academician from the United States. I have a question for Mr. Manian. We hear a lot about the digital currency. And if you have followed that, the central banks are trying to get into this, including the Federal Reserve.
Yes.
And my question for you is, what do you see in the future in terms of whether or not central banks want to get into the retail banking per se, or they want to stay as the policy setters. And this is kind of convoluted area that is still I'm trying as an academician to figure out which way this is going to go, and it has a profound, as you know, the impacts and ramification for the global finance. Thank you.
Thank you very much for the question, and again, we can spend hours on this question, but I would say there are different motivations around the world from the central banks at least going this direction. Part of it is defensive because there are a lot of digital means of payments out there which partly don't go through the banking system and don't go through the purview of the central banks, and I'm talking about wallets, for example, which, if you have billions of people on a single wallet, actually nothing gets out of the wallet. All the transactions happen within, therefore something maybe doesn't get controlled. The other piece is obviously the persistence of cash, petty cash in certain markets, some European markets, some African markets, etc., which is potentially, hindering both trade and the speed of trade, but also leads to fraud and other, tax evasion, etc. So that is one of the motivations behind the retail side of digital currency, retail-driven CBDCs, if you like. And then there is obviously, geopolitical considerations, independence of a certain country versus wallets coming from the rest of the world, etc. So different motivations. I would say one of the challenges that we have, and we as JP Morgan have created our own JP Morgan coin, which is nothing but a digital version of a fiat currency, one-to-one, dollars, euros, etc. And on a specific, blockchain, the future is about interoperability and how these things can actually work together and be on a similar platform. We've started an experiment in Singapore a couple of years ago with the Monetary Authority of Singapore, with DBS, Standard Chartered has joined, a platform called Partior, which we invite all the banks to actually join to make this experience multilateral. And also CBDCs will be looking to join that as well. So as much as possible, we won't have a single standard, but interoperability is going to be key for the future.
Right, I think there's not much time today. We'll have to stop here, unfortunately. Thank you so much, Shahrukh, for such an insightful interview.